in September sales. And SBI Life lists at a premium of 735 a share on the National Stock Exchange.
All right, it's turning out to be a good start to the week, and well, we are back after a long weekend here. Nifty's trading, in fact, it touched the 98.50 mark, but currently it is hovering around those levels of 98.40. India VIX, which opened in the red, is currently seeing an uptick of almost 2.5%. So after 2 straight days of fall in the volatility index, we are once again seeing some sort of increase coming there by. Even the Bank Nifty futures are trading in the positive territory today. If you look at the options data, what kind of range that is suggesting, clearly so far it's 9,700 on the downside to about 10,000 of the upside. But if you go by the premium, 96.80 is the level which majority of the analysts have been talking about. If Nifty breaches that mark, there could be some sort of sell-off which could be triggered. But so far, all good for the markets. Nifty at about 98.40. In today's trading session, we've seen some put trading coming in for strikes like 9,700 as well as the 9,800 put strike has seen some sort of open interest addition, whereas on the call side, 9,900 is the strike, which so far has seen some sort of open interest build up. Almost 1.5 lakh shares being added there. In terms of what the FIs have been doing so far, they started this series with only 56% net long positions on the index futures, and Agam, they seem to be pretty much hedged. But if I go by the Friday's data, they added more of longs than shorts. But if you look at the options data, they've been buying more of puts and writing more of calls, clearly indicating that they are pretty much hedged on the downside.
Right. Well, Navneet, I do want to address some of these stocks, but before we go into some of these big movers in terms of open interest, let's also address the SBI Life IPO, which has listed at a premium. It's made a debut with a 4% increase, making it's the second private life insurer to be listed on the stock exchanges. Our in-house expert, Saloni Dhanuka, is joining us to give us all the details. And also joining us on the phone line is Nidesh Jain, research analyst at Investec, who will also take us through the valuation. But Saloni, take us through how the listing's been.
So SBI Life lists at a premium of 5% as compared to its issue price of 700 rupees, making it the second life insurer to list on Indian exchanges. And let me tell you, it is the largest life insurer in India based on new business premium earned, and it has witnessed a 36% compounded annual growth rate in the same during past 3 years. And to elaborate the same, we are in conversation with Mr. Nidesh Jain, research analyst at Investec Securities. Good morning, Nidesh.
Yeah, good morning.
Yeah, so what are the growth drivers for SBI Life Insurance going ahead, as a lot of brokerage reports cites concerns regarding their higher valuations as compared to peers. So what's your view in terms of valuations for SBI Life?
So firstly, if you look at the growth, as you rightly mentioned, that it has grown at 36% CAGR over in the past. And if we still see there is an immense growth potential in State Bank of India branches. If you look at any metric, life insurance premium per branch or number of customers who have been sold a life insurance policy, the numbers look abysmally low versus the bank likes of HDFC Bank or ICICI Bank. So from here onwards, also for next 3 to 5 years, I expect this company to grow at 30% CAGR in new business premium numbers. Which will be the highest growth in the private sector among top life insurance companies. They have already overtaken ICICI Pru Life on the new business premium side, and the largest has become the largest private sector life insurance company. And I think they will continue to gain market share over the next 3 to 5 years. So that is number one. Second, on the valuation front, they at current price they will be valued at around 3.4 times price to EV. And ICICI Pru is trading at roughly around 2.9 times price to EV. So they are roughly 15% premium to where ICICI Pru Life is trading at.
All right, Nidesh. While talking about valuations, SBI Life has the lowest cost ratio of 11% as compared to other insurance players. What's leading to lower cost for SBI, and do you think it is sustainable?
So there are 2-3 factors. Number one, their cost of operations is low, given they are a PSU entity versus other life insurance companies being private entity. Second is their agency is very productive. So the amount of premium single agent on an average collects for SBI Life is around 2.5 lakh versus private sector average of less than 1 lakh. So their agency is almost 2.5 times productive versus an average life insurance, private life insurance agent. That leads to a significant improvement in cost to income ratio. And third is, if you notice, other private sector entities have to pay higher commission rate to their banks to get access to bank assurance channel, while SBI is paying lower commission rates to the SBI, State Bank of India, which is also benefiting them in their cost to income ratio.
All right, Nidesh, we'll leave it at that note. Thanks very much for joining us today. Well, it's turning out to be a good listing where markets were expecting a very tepid listing coming in for SBI Life. Remember, the issue price was almost 700 and the stock currently trading at those levels of 730. There were some concerns with regard to the premium valuations which were being quoted in the IPO as compared to ICICI Pru and Max Financial. But looks like the premium valuations have been justified with the higher renewal premium growth in the last 3 years, which SBI Life has been quoting. Clearly, it's turning out to be a good so far. We were expecting a tepid listing, I remember last week, for a non-life insurer like ICICI Lombard, but market seems to be giving a thumbs up to these IPOs.
Right, and there have been a lot of concerns with respect to insurance companies and the kind of valuations, but as you can see, we are looking at a decent listing and a good debut for SBI Life. But moving on, I also want to address some counters in the futures and options space, which have seen a substantial up move in terms of open interest. Let me quickly go through them. One of them is Voltas, which is looking at a 11% surge in open interest. We also have GAIL. Of course, we will also be addressing the management of MGL, which will also take us through the GAT pricing. But GAIL is gaining once again. It's up 4% with an increase of nearly 11% in its open interest. Page Industries and OFSS are among the other counters which are looking at substantial gain as far as your open interest goes. Page Industries is one very curious counter here because it's been flat over the last 5 sessions, but its open interest has jumped from 6,000 shares 5 sessions ago to as much as 23,000 shares right now. So there has been a substantial amount of accumulation in its futures, but the stock itself has not moved. So this is a curious one. And when you consider what's happened in terms of the cash market too, you'll notice that it's been very unevenly spread over the last 5 sessions when it comes to the traded quantity as well as deliverable quantity. But the price of this share has continued to move between 18,500, 18,600. So because of the fact that there has been a lot of consolidation in the last 5 days, but there has been a substantial increase in its futures open interest, makes this case curious and whether or not we could see a big up move. But moving on, the government on Friday revised the prices of natural gas for the first time in 3 years. Let's understand the impact of the gas price hike on producers like Mahanagar Gas. And joining us on the phone line is Rajiv Mathur, Managing Director of the company. Hi, Mathur. Hi, Rajiv. Thank you for joining us. Well, the first question is your impact on margins on the gas pricing. What can it do for margins, or whether or not, or what is the quantum of these hikes will be passed on to your customers?
So traditionally, our prices have been at a discount to petrol as well as diesel substantially. And our belief is that in the past we've been able to pass on the increase, if at all, in entirety. And we are looking at various factors, and our expectation is that the increase is not substantial. It's gone up from $2.48 to about $2.89, which is about 40 odd cents. So the customer should be able to, absorb that increase in price. And we will look at every factor before we take a call on increasing the prices.
So PNGRB proposal of unified tariff, will that increase your sourcing cost?
Well, the unified tariff will allow us to access gas from any import terminal at a uniform tariff. So that will allow us accessibility of gas from different, suppliers in the long run. Of course, in the short term, should I say, there would be a marginal increase in the tariff which we pay for transportation of imported gas from the terminals from where we are buying the gas. So there will be a marginal impact, if at all, in the beginning. But as you know, tariff is only 10 to 15% of the entire delivered price of the product. So even if it goes up marginally, it won't impact the customer much.
Okay. So your volumes per day has been in the range of 2.5 to 2.6. Now with PNG supply commencing in Dombivli, how much is that expected to go up in the coming quarters?
So we've been able to do a compounded annual growth of about 6 to 7%. And our expectation is that we will end up this year also with that kind of growth, with Dombivli, parts of Navi Mumbai and parts of Raigad also coming on our fold. The impact would be more felt in the coming years than the current year.
So what is the kind of volume growth that we can expect in the next 2 quarters, and what is the volume growth for financial year 2018 that we can expect?
See, I can't comment on the exact volume growth which is going to happen towards in the balance period of the year. But all I can say is that we've been doing better than what we've been doing in the last year. And therefore, if that is any indicator, we should be able to end the year with better numbers in terms of volume as well as financial numbers at the end of the year.
So how many stores did you add in Q2 FY18, and what will be your target addition for the remaining financial year?
So if you're talking of CNG stations, we added about 15 last year. This year our attempt is to cross the 20 mark, and we are pretty much on course. We have the land, we have the requisite clearances, we have awarded all the contracts, and we are awaiting for various clearances from different authorities. So if everything falls in place, we should be able to reach the 20 number this year.
Lastly, sir, what are your expansion plans? Now, the company has a good annual cash flow. How do you plan to deploy them? Will the company pay more dividends, or is there any expansion plan that the company is having?
We've been handsomely rewarding the shareholders. That's point number one, and we should continue to do that. We are looking at expansion within our own areas because there are lots of low-hanging fruits. We've only done about a third of what the potential of Mumbai and adjoining areas is. Therefore, we will attempt to roll out more and more domestic connections, more and more number of CNG stations. We'll try to increase the infrastructure in Raigad and adjoining areas and bring on board other satellite towns so that, we are able to provide the service there, and in turn, you will see the growth as we go along.
That will be all, sir. Thank you, sir. Thank you for joining us.
All right, thanks Amit for joining us too on the F&O Show. That was the management of MGL talking on how the gas price hike impacts them. But let's get back to the markets and welcome our guest for the day. Amit Gupta, Head of Derivatives at ICICI Direct, is joining us, and also joining us on the show is Rahul Shah of Motilal Oswal Securities. Good morning, gentlemen. Appreciate both of you joining us today on Bloomberg Quinn. Amit, would like to come to you first. It's been a positive start to the October series so far, to the week as well. What's the kind of range that you would be watching out in the coming days?
See, if you look at the last 3 series, whenever Nifty has come down, 9700 put base has been, remained higher. This time it is around 40 lakh shares. And I think over the period of this particular series, because we have 1 or 2 holidays also, so it's a little shortened month series. I think what will happen, the base at 9700 will start increasing if Nifty, starts consolidating here. And the volatility which moved to 13.5 or 13.8%, so that has come down below 13 now. So that is around 12.5. So that means some writing activity has started in options, which will lead to more consolidation now above 9700. So we are writing 9700 put option only, which is somewhere around 67-70 rupees. If somebody does that, then I think eventually the premiums will start coming down, because in the just last series we had come down sharply, the walls were up, so the premiums were a little higher. And that is why I think if we start doing that exercise again of writing these put options near these crucial levels, then whatever market takes more time for consolidation, eventually the premiums will erode and these may come down to 15 or 20 rupees. So that is what we are recommending right now to our clients.
Okay, Rahul, how about you? How are you viewing the moves on the benchmark indices?
I think again the most outperformance we had seen in the Nifty was the financials. I think that they have taken some backseat in last series what we saw. So I think again, so that pause I think will continue for some more time. So I think again we retested Bank Nifty at around sub 24,000 levels second time after reaching 25,000 or so. So again, and I think financial still looks weaker if you look at the new series which has opened. I think all the leading financials and private sector banks, which are the heavyweights in your bank-ex. So my sense is that till the time bank-ex does not perform, Nifty would be sideways, and rightly what we are seeing right now is 97 with the highest open interest and puts. So and call with 10,000. So and globally all across markets are all time, and we've been underperforming. So my sense is that it should be a sideways for the Nifty for a couple of weeks.
Right, so it could be sideways for Nifty in couple of weeks, but let's shift focus and talk about the options corner now. Amit, would like to come to you. What would be your option strategy for the day?
See, I think the few stocks like, low beta FMCG space one can look at. For example, look at Dabur. Now, Dabur, I think, has been consolidating above 300 levels now, so which was a major resistance for the stock when the other stocks were quite trending. So once it has taken out this, you look at the volume pattern along with the delivery pickup. So we have one quantitative indicator that we call as Z score. So when we look at the last few sessions delivery and compare with the last quarter, so that has increased substantially by almost 55-60%. So that means on declines, whenever market comes down and this stock comes down a little bit, people have started buying it in cash. So it's a very good base formation what is happening above 300 now for the stock. So we are keeping a stock at stop loss at 304, and we are looking for a target of 326 in the coming session. So I think these low beta FMCG stocks should show some sort of resilience against the jitterness of the market right now, and eventually they should start moving up.
Well, Rahul, I'm going to come to you, and you have call moves, call options as far as ONGC and Strides goes. Can you take us through those?
I think again what we've seen is after crude moving up sharply, and we've seen ONGC performing after a long time. So obviously with the volume we've seen and against the market, the stock has been doing quite well. So the best way to play this stock is buying an options. So 175 call option trading at around 4.5 rupees. One can look at buying with a target of 7 rupees on that. Secondly, I think Strides, what we saw in a pharma. From a lower end, we saw as a sector, we saw some kind of renewed interest, and this stock saw a lot of hammering towards expiry or so. So I think there's a support at the stock technically at around 875 or so. So I think again pharma being a very volatile, so I would buy options in that. So I think 900 call option trading at 30 rupees I would buy with a stop loss of 24 and target of 50.
Amit, you had a sell call coming in on 9700 put strike. Could you take us through the same?
Yeah, correct. As I discussed, 9700 put still holds, the maximum OI in this particular series, the put base. And that is where we believe more consolidation is likely to happen, because Bank Nifty has already fallen substantially from 25,000 to 24,000, and in fact lower than that. So this series, if you see Bank Nifty also 24,000 put base is coming higher. So that means some more consolidation in Bank Nifty may happen here, and this was the major dragger for Nifty also. So in that case, Nifty may spend some time now above 97. So that is why we are writing 9700 put option, where the volatility was a little higher in the starting of the series, and that volatility now is coming down. So that will support the writing trade. And eventually, when the premiums will come down, the traders who will do this trade, they will get benefit out of this. Keep a stop loss around 95 for this.
All right, there you have it. So you will be watching out for the 9700 put. But moving on, our viewers have also written to us on social media, and the first query comes from, the first query is from Bhavesh Astik, and he has bought an October call option of Just Dial of strike 380, and he wants to know if it is advisable to hold on to the position. Amit, I'm going to come down on you on this one. He has a Just Dial option of 380 strike and it's a call. What should he do?
See, Just Dial, if you see what happened in the last series, initially there was a substantial closure of short positions because the stock has been continuously falling before. But then we saw that some short closure happened, but eventually that also, ended in a negative. So eventually, I think the stock is more in a consolidation now rather than continuously falling again, because we have already seen a substantial more than 30%, 35% of fall in that now already from the high levels. So that is why we believe buying a call option for few days, possibly one can continue with. But the problem in the stock is it is in a consolidation mode now. And that is why if somebody is buying the call, and if suppose a couple of weeks are gone by, then you may not make money because your premiums will come down because of the time decay. So that is why I think just wait for 1 week or so, and then you can start closing the positions. Don't wait for further, because your premiums, whatever will be there, that will also go off just because of time erosion.
All right, that's the call coming in on Just Dial. Bhavish, we hope you're watching our show. Amit is recommending to hold on to your position in Just Dial for a week, and probably after that you can look to close your position. He bought 380 call strike, and currently Just Dial trades at those levels of 373, an underperformer in last 12 months, down about nearly 14 to 15%. Let's move on to our next query, which comes from Vishwas. He has written to us from Bangalore. He's holding 2 lots of Manappuram Finance of November series, which he bought at about 109. He wants to know when exactly can he break even, or also should he hold on to his position or not. Rahul, would come to you. He's holding Manappuram Finance 2 lots, not of October, but of the November series, which he bought at 109. Currently, the November futures are quoting a price of 97.5. Clearly, he's losing a lot of money because the lot size here is 6,000 and he's bought 2 lots. Do you think he should close his position or wait because it's November series?
I think what we have seen is, again, as I discussed earlier also, in financials we've seen some kind of a pause. So maybe with this, even in, we've seen housing finance and NBFC consolidate, and we saw a lot of sell-off during the expiry. So I think in the newer series we've seen some kind of interest, but I don't think so that in near term it should show some renewed interest. So best way I would suggest him to buy a puts of 95 levels of Manappuram and keep it, as he has got a November futures. So maybe could be a volatility and we could see some upside. So best way to hedge his position and keep it open.
There you have it, Vishwas. I hope that's answered your question. But before we wrap on the show, what are the trading strategies that our experts have for our viewers? Let's take a look. Well, Rahul, I'm going to come to you. You have a long call on JSW Steel futures as well as Tata Motors. Can you take us through those?
I think what we've seen is 2 sectors which is outperforming in this in this market is auto and metals. So in that space, I think JSW Steel, we've seen decent longs built up on Friday itself, and today also stock has opened with a gap. So I feel JSW Steel can go to 275 or so, which was its previous high. So one could go long with a stop loss of 248. Second is, after a long consolidation, we've seen Tata Motors going upwards, and increase in open interest we've seen in today's session. So I would, the risk to reward is favorable in Tata Motors as in a auto pack. So I would go long with Tata Motors with a stop loss of 414 and target of 440.
All right, so those are 2 long calls coming in from Rahul on JSW as well as Tata Motors, a counter which is doing well on back of good September sales numbers coming up about 25%. Even the Tata Motors DVR, that's the biggest F&O gainer for the day. Amit, you have a long call on Nestle. Could you take us through the same?
Yeah, see, the stocks which have already gone through the last 3 years of consolidation, I think it will be difficult for the market to drag them down, even if Nifty comes down by another 2 or 3%, which I think is not there below 9,700 now. And Nifty is already down from 10,100, but the stock is there only around 7,400, 7,300 levels. So I think the declines in the stock is a buying opportunity. That is very clear to me, because if you look at the pattern of delivery buying, in the last 2 or 3 series, it has been really increasing. Now 66 to 68, that was the band. in which we saw that particular delivery buying happening, and that is where I think it has already formed a good base. So you keep a stop loss there and hold on the positions. Eventually it can move towards 70-800 levels also. So we are quite hopeful. Once it is out of this last 3 years range, I think whenever the market finds support, you will see a good move in Nestle on the higher side. So it has been again a low beta FMCG stock just like Dabur, but these stocks now are showing resilience and maybe a good may have a good participation on the higher side now in this consolidation market.
Rahul, I did have a question on Page Industries. Now, the stock really hasn't done too much over the last 5 days, but its open interest has moved up from 6,000 shares to well over 23,000 shares right now. And, honestly, I was looking at the way its cash market volumes have been. There has been a lot of volatility. It's not been very consistent. In such a case, what does one do? How will you view the movement on the stock, especially considering the fact that the OI has surged while the stock itself has remained largely flat over the last 5-6 sessions?
I think way the Page Industries stock, if you look at pull out the last 3 or 4 months data also, I think the stock has been quite in a range, plus minus 5-6%, and that it has been. And the surge in the open interest and the stock being a flat. So I feel what it could be, I think the long's been, maybe one could expect some kind of momentum maybe in a couple of few sessions later on.
All right, that's the view coming in on Page Industries. But the other counter, which is having a rub-off effect after the new kid on the block, SBI, had its listing. ICICI Prudential is doing pretty well. That counter is in the futures and options space. Let's just pull up the chart of that. We've seen some sort of build-up coming about in terms of long positions there. Rahul, any view on ICICI Prudential? Would you recommend taking any fresh longs here? No major OI additions so far for the October series, but in the spot, the stock's trading with gains of over 4%.
I think we've seen on back of SBI Life some kind of momentum building up in ICICI Pru. The stock had corrected also from the recent 440 or so odd levels, so a decent correction of 10%. So, and looking at the current thing, I think one can go long on ICICI Pru, but with a strict stop loss. I think 397, if it breaks, then I think one should exit. So with a stop loss of 397, one can expect to go again the stock to 430 or so levels.
One can go long on ICICI Pru with a strict stop loss, according to Rahul. And with that, we want to thank our experts, both Rahul and Amit, for joining us and taking us through those calls, as well as answering some of our viewer queries. You can write to us on Twitter, Facebook, or just call us on 022-4540-4141 with all your queries, and also we'll try and address as many as possible on the show. Just remember to add the hashtag AskBQ.
Well, with that, it's a wrap on this edition of the F&O Show. Thanks very much for watching. Well, Equities Plus is up next. Stay tuned to Bloomberg Quint.